G'day folks, welcome back to another update on natural gas. Now this looks like a fresh bullish breakout on the daily chart. We'll cover that in a few minutes. Before we go any further, make sure you hit that like and subscribe button to support the channel. Looking at the outlook for natural gas demand, as of today, February 6, natural gas markets are experiencing heightened volatility due to increasing energy demands from AI-driven data centers. The ProShares Ultra Bloomberg Natural Gas Fund ETF, BOIL, seeks to provide twice the daily performance of the Bloomberg Natural Gas Sub-Index, while ProShares Ultra Short Bloomberg ETF KOLD aims for twice the inverse daily performance. The United States Natural Gas Fund UNG tracks daily changes in natural gas spot prices. Investors should exercise caution with these leveraged ETFs, as they are designed for short-term trading and can be significantly impacted by daily price fluctuations. Demand for AI. The rapid expansion of AI applications is driving substantial increases in data center energy consumption. Projections indicate that data centers could account for up to 21% of global energy demand by 2030, up from current 1 to 2%. This surge is leading to a greater reliance on natural gas to meet the escalating power requirements. So we always start with the long-term trends. This is the natural gas commodity price. So on the monthly, we've got a bullish break above the moving averages on the CCI, likewise on the price chart. So that's a bullish movement on the monthly. On the weekly has been bullish also, but notice more recently, the last couple of weeks, this week it's actually broken. It's about to break out as well on the weekly CCI, but it's actually in that middle moving average range of the CCI. The price touched that last week, but it's actually broken out of that this week so far. Then there's no divergence to be seen on either of those monthly or weekly charts so far. On the daily, it did actually hit this resistance up here at 40.60, and it's bounced off this minor resistance as well at 38.78. It's currently gravitating back towards this. That was gravitating towards this ascending line initially. You'll see there, and it started gravitating back towards this descending diagonal trend line. But notice it's actually fluctuating on this minor support we got at 32.16, and now it's sitting around there. You'll notice the CCI is also broken into that back into the moving average range, and that's giving us a neutral positioning. So no trading to be done on the intraday if you're trading on the intraday. Now looking at the intraday chart as well, again we only go short when the CCI is below on the daily, and we go long when the CCI is above on the daily. So at the moment, even though that would have been a nice little trade to take, it's a bit risky because you can see there it's hovering above and below that moving average range. So again, wait for it to be more conclusive and break above on the daily to be long, and by that stage you'll see this as well bullish on the hourly as well. At the moment, the hourly is showing a neutral positioning, so even if you did trade that, you would have got in there at the top of that candle, and you'd be getting out on the current hour if you were trading that. So again, also just another thing to note, if, for example, the daily is showing bullish movement and you saw this happen here, don't enter when you see a gap up like that. Don't enter a position up here. You want to get into the trade when the CCI is a fresh breakout like it was back there, and likewise the price. You can see there the price broke just above that moving average range, and so did the CCI. That would have been an excellent trade to take if you're trading long. Again, when you see this gap up or the price is well above the moving average range, try and avoid taking that trade. Likewise, for example, back here, if you saw if that was a fresh breakout on the downside on the CCI and the price was down there somewhere, ideally you want to get out when it's close to the breakout back here. So at the moment, neutral positioning on the daily and neutral on the 1 hour. So here on the monthly chart for BOIL, there's no CCI for it, although the price is well below its moving average range, so giving us a bearish outlook. On the weekly, that's still a bullish momentum and bullish divergence. You can see there higher lows on the CCI versus lower lows on the price. In the last few weeks, we've had a break above the moving average range there on the price chart, and that's a bullish move, a slight bullish move on the weekly in conjunction with the CCI. On the daily, if I zoom into that, again, it's hit this resistance up here at 80.01, broke down and actually broke below the moving average range of the price and also the moving average range of the CCI. Come down a bit. There was no divergence to talk of there, and it went bearish for a number of days, and then it's finally broken into that moving average range, giving us a neutral signal. Now, it was a slight bullish break above there, a little bit of a false break, but again, notice where the price was on the moving compared to the moving average. You want to get it close to breakout like it was there, for example. That would have been a nice little area to go long had you gone long. But notice it actually broke down into that moving average range. So it depends where you put your stop loss. you want to give it a bit of breathing room. You may still be in a trade, or you may have got stopped out on that one. At the moment, it's giving us another bullish move above the moving average of the CCI and also above the price moving average. So a fresh breakout on the daily. If we go to the intraday chart, again, if you're trading on the intraday, you're going in the direction of the daily. So you can see there you might have gone long on that break above there on that candle, and you'd still be in a trade today. Now just have some pretty tight, watch it fairly carefully. So you want to see it, for example, when it breaks into the moving average range like it did here, you want to get out of the trade. So for example, back here, that would have been, so that's what I mean by not taking a trade if it's well above the moving average. So there, for example, that was well above the moving average range of the CCI, and the price was as well. So because it's so far off, I would not have taken that trade. If there was a fresh breakout on the CCI down near the moving average of the price chart, that's where you take a trade. Like it was here, for example, that would have been a better spot to take a trade in that range. There, for example, it's bullish on the CCI, but still bearish or neutral on the price chart. And that would have been a nice spot to go short in conjunction with this area down here on the daily. Fresh breakout on the hourly, fresh breakout on the price chart, and had you gone short there, and you would have closed it out when that CCI broke into that moving average range there. So you would have closed it out at the close of that trade, and you would have made 4.3% gain in 11 hours of trade. That's how you trade. So at the moment, fresh breakout to the upside on the hourly and also on the daily for BOIL. So for KOLD, this is the inverse ETF. It's broken below the moving average range of the price chart on the monthly. There's no CCI on the monthly drawn yet, but you can consider that a bearish move on the monthly. On the weekly, it has been bearish also for some time in both the price and the CCI broken below. Now, had you gone short there on the weekly, you'd still be in the trade. Again, wait for the CCI to break into that moving average range. Gives you an earlier exit signal than the price moving into the moving average range does. On the daily, so again, if you're trading on the daily, go short only, as in accordance with the weekly trend. So again, on the daily, you would have taken a short position there, fresh breakout on that candle there, and you would have closed it out. It touched it there, but I'd like to get it a bit deeper into the moving average range. It also touched it there, then it started moving into the moving average range there, and that's where you would have got out at the close of that candle. On a daily, that returned a 44.2% gain in 28 days of trade. Now, at the moment, if you're trading on the daily, don't take long trades because the weekly is still bearish. But if you're trading on the intraday, then you'd be neutral at the moment. It was bullish there for some time on the daily. So let's see what's happening on the intraday. So again, the daily is neutral, so avoid taking long or short trades on the intraday. And you can see there, you would not have taken that trade. It's another example of not taking a trade that's well off away from the moving average band. So even that's a fresh breakout there on the CCI. Notice where it is on the price chart. So that's not a safe area to go short. And had you taken that, you would have entered in there and you would have got out there. So that would have been a loss. So again, get it when it's a fresh breakout between the CCI and the price moving average, like it was back there, for example. There's another example of a potentially bad trade. Don't take those trades there. Even though they went higher, it's a lot more riskier. So again, we're trading with all the probability. We're trying to avoid minimum risk as much as possible. So on the hourly, it's neutral. Avoid trading long or short based on the daily. It's currently on the hourly, it's bearish. So again, wait for this to break to the downside to take short trades. Otherwise, if it does break on the daily the upside, then you start taking long trades on the hourly. So for UNG on the monthly, it's below the moving average of the price chart, giving us a bearish outlook. Slight bullish move on the CCI, very narrow CCI moving average range. So again, I'd like to see this break higher on the moving averages on the price to be more confident of bullish movement. On the weekly, we had another bullish divergence here. It's currently still bullish on the CCI and also bullish move on the price chart on the weekly, so bullish movement. On the daily, it hit this resistance up here at 20.02, broke down below our moving average on the price chart and also the CCI. And this one also broke up into that moving average range, giving us a neutral positioning on the daily. So again, just wait for this to break above or below to be more decisive on which way you want to go. In terms of the intraday, again, avoid trading based on the daily, but you can see here we had a bit of a gap up since our last video, and again, you wouldn't have taken that trade because that was too far away from the moving averages. This one pulled back, broke into the moving average range, and it finally broke into a bearish momentum ever so slightly, but notice where the price is. The CCI gave us a bit of a false break to the downside. Again, you don't take that short trade because the daily is still in neutral positioning. And again, we've got a fresh breakout to the upside on the 1 hour. But again, don't go long yet until we see this break above on the daily. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again and see you in the next video.